Okay, peace and blessings to the tribe. Welcome to Day Trading School. Today is our first day, so really excited to get this thing started. Remember, we're going to start with the very basics, and we're going to build up just to show you that this isn't hard. Sometimes it's just overcomplicated, and it's all cumulative. So the more you understand the basics and those grow into your subconscious, you'll be way better by the time you get to high school when things get a little bit more challenging and there's a little bit more to remember. You want to make sure you got the basics down packed, like the back of your hand. You just get it, you know it, you see it, you don't have to think much about it. So that's what we hear. That's our goal. Let's try to accomplish that by just being patient with ourselves, being patient with this learning journey. Okay, so if you're ready to learn, do me a favor and type unlock all caps in the chat so I can know who's in the building and we'll go from there. Hey, thank you, everybody. Thanks, Tribe. Appreciate y'all. The hang time. All right, cool. So thank you, everyone. First grade, let's get this thing started. Really excited about this because sometimes we like to just jump right into the charts and forget to even look at what a chart is, why is it built the way it's built, and how it's here to actually give us an advantage, okay? So we're going to go over today pretty much just the overall chart, right? And how do we get started with graphing some things? So I'm going to go ahead out of here, move that. And here we go. So I'm right here on a chart on a website called tradingview.com. Okay, tradingview.com. You can create an account on this website totally for free. They're going to show you a couple ads down here, but it's okay. Tradingview.com is where you want to create your account at to do some analysis. Now, some people do their analysis on other websites as well. I think like charts.com or MetaTrader also has a website, right? Cool things you can do. So that's all cool, but I think TradingView by far is the best as far as the tools they give you. You could build strategies on here really simply. You can replay the market and you go backwards and forward in time, things like that. So I'll drop my link here too, because if you sign up with my link, I think we both get like 30 bucks. So I think that's pretty cool. So you can use that towards, your purchases and like everything else after that. So boom, there we go, cool. So here I am right here on tradingview.com, and just want you to take a moment to take this all in and imagine that this was all built for you, okay? Imagine that this was built for you. This was not built by a broker to confuse you. This was not built by a bank to try to predict what you're going to do next. This was built by a software company who understands that a lot of people trade, especially there's a lot of day traders out here, and they only had limited amount of tools in the past. And a lot of those tools were built early 2000s, sometime in the 90s, and they just were very archaic, very flat, not user-friendly at all. Okay, now this one, it may look like a lot going on here, but it is supposed to be user-friendly for us. Okay, so in the next session, we're going to talk more about everything here. Like, for example, our tools over here on the left-hand side. Okay, our time controls and alert controls, up here. And then over on the right is where we can get more macro data like news. We can also see previous alerts. We can take notes. So these are tools too, but these are more like functions. It's a lot more advanced over here compared to what we have over here on the left. But we use these like a lot. We use these back to back to back, whereas these tools over here, they come in handy every now and then. Okay, so we'll get to those later on, but that's going to be the order. And then we have one more area down here way at the bottom. Okay, and this is where you can do stuff like custom trading indicators. You can keep like a little notepad down here. Strategy tester, if you create a strategy, you want to test it, and you can also do some paper trading. So once again, a little bit more advanced, and you can do some higher level functionality down here. Okay, so we'll get more into these, right? We'll build our way up to that. And we also have a course dedicated to this. It's called Tools of the Trade, and it's included with your membership. And that comes on your dashboard when you log in, and it breaks down these in detail. Okay, so day trading school, we're not concerned with everything right now, so it's no need to overload the brain when it's not even necessary. So that's why we're trying to simplify stuff. That's another reason why you see a blue line on this chart instead of what you usually see, red and green candlesticks. Okay, we're going to wait. We're not going to just jump right into candlesticks because candlesticks are a luxury. Okay, all right, they're a luxury. We don't really need them to trade, but if you have them, they give you a better advantage. Okay, but we'll get to why. We want to build up to that. So let's just look at this chart overall, and I'm going to do some annotating so you can get a better idea of what I'm talking about. Every graph, which is what we're looking at, I know a lot of times we say charts, but this is a graph. Okay, you see we got these lines. You know, every graph has this grid. Okay. Right, this is our graph right here. And it helps us because, you know, horizontal and vertical lines tell a story. So it's really important for us to know that story that's being told. Okay, for us, every graph has two things. It has a X plane or X axis, and it has a Y plane or what we call the Y axis. So for us, this down here, that's our X axis. Oops. Okay. Okay. And then over here, I'll do a, oops. This down here is our Y axis. Okay. Okay, X axis and Y axis, right? Very basic, very plain. And they tell two different stories though. Over here on the X axis, this is where we're going to be getting time. Okay, time is very important here. All right, dates. So let's put time and date down here. And then over here is where we get price. Okay, the Y axis is where price is being told at. Okay. Let me change that. No, they won't. Okay, there we go. No, they didn't. I don't know why it's so hard to select this stuff. So yeah, this is our time and date axis, and then this is our price axis. And that's what you just got to get used to. So when you're looking at these charts, you just want to always keep in mind that they go, the bottom is always going to tell us the time down here. Okay, always. So we got, this goes back from May. If I click in here, you see I got this cursor up here. And if I just go along the bottom, you can see right now I'm on the daily time frame. We're going to talk about that in the next lesson. Okay, this is first grade 1.1. We're going to also do first grade 1.2. Okay, so as you see, every time I move this over a little bit, the date changes. So June 27th, 2019, June 28th, 2019, July 1st, 2019. And it skips the weekend dates because of this is a Forex chart, right? The British pound versus the US dollar. This is Forex. It's not open on a Saturday, and most of Sunday it's not open. So it skips those dates. But you'll see every time you move over, it just changes that date by 1 day, sometimes 2 days if it's skipping the weekend. Now it's changing dates accordingly with this right here, with this line, this blue line. This is a line graph, okay? And this line graph just represents the price at a certain time. Okay, so if I go back to, let's say I wanted to go to January 3rd, 2022. I'll try to find January 3rd down here, right here. And I go up and I can see that the price on January 3rd, I'll just look over here to the right, look all the way over here to the right, and you'll see that the price was about 1.3494. Okay, 1.3494. So that's the price. Okay, the price. Now, what is the price of a Forex pair? If this was a stock, we know the price would just means, you know, the price of Tesla is whatever the Tesla stock is worth today. Okay. If this was gold, we will be checking to see what is gold, the price of gold compared to the US dollar or the British pound or the Japanese yen, whatever you're comparing gold to, because it has to be compared to something. Okay. Everything is compared to something. A stock is compared to the value of the US dollar. So if you say it's $75 per share, you know that's the share compared to the US dollar. Okay, so everything is compared to something. For Forex, the comparison is these two currencies. So you get this by, that number tells us, if you see 1.3499, that's how many US dollars it takes to get one British pound. Okay, so right now, if we look at the current price, we see down here, the price coordinates, the price axis has two numbers. You see it says ask and bid. Okay, ask and bid. If you see that, type unlock for me. Okay, so we got another one right here too. We got, let me show you this. We got ask, bid, and then there's one more, which we call like the mid, okay? So we got ask, bid, and then the mid price. The mid price is just the middle of these two, okay? This is just the middle of these two. That's it. So it's not really that significant, okay, compared to the ask and the bid. Now, the ask and the bid, they are significant, okay? The ask price is what somebody, what you're like pretty much asking if you want to sell. Okay, so this is the sell price. If you want to sell right now, this is what you can sell it at. The bid price is you would have to put a bid in, and it's how, if you want to buy it, this is how much you would have to buy it at. Okay. Okay. Thank you, everybody who said unlock. I want to make sure I did that right too. I always confuse these two. 2260, 2259 bid price. The bid price is lower than the ask price. So, and the way I always remember this, and this is how you can remember it too, to make sure you got it right. Because sometimes I'll be like, okay, is the ask price really the sale price and the bid price the buy price? What you can do is you can always ask your price. Ask yourself, if I bought right now at this bid price and wanted to sell at the ask price, would I make a profit? If you can make a profit right away, you're probably doing it wrong. Okay, I probably got those wrong. So watch this, ask price versus a bid price. Okay. So I'll go over here really quick. Oh, this ain't good nothing. The bid price will always be lower than the ask price or offer price. The difference between the bid price is called the spread. So it said the lowest price at which seller will sell the stock. Yeah, someone will sell the stock. So pretty much this is the who's about to sell, who's to buy. But then this is what you also got to look at, is this right here. if you want to buy, okay, if you want to buy right now, if you think this market is going to go up, you'll pay the sale price because somebody has to sell it to you, okay? So this is what somebody is selling it at right now, okay? So you pay this if you want to buy. Let me go over here to my text. That ain't working. So you pay the ask price if you want to buy right now. Okay, so if you want to buy right now, you pay the ask price. So if you think the market is going to go up, this red one is what you need that, right? You need somebody who's going to sell to you. Think about that, okay? We're always buying and selling from each other. We're always buying and selling from each other. We're always buying and selling from each other. From somebody else on the market. We're always buying and selling from each other. We're always buying and selling from each other, okay? Now the buy price, I'm gonna put this in a different color right here. You pay the bid price if you want to sell right now, okay? So if you see that, let's say you did actually, right here, you wanted to buy, okay? We bought this instrument right here, okay? And it does go up here, all right? It works its way up there. I'm gonna make it look more realistic, right? It'll zoom its way up here. Let's see if we can make it blue just like this other one, okay? So let's say it starts to go up here, right? Down here, you paid the ask price because you had to buy it from somebody else. Somebody was asking for this price and you had to give them that price, okay? Somebody was asking for that price and you had to give them that price. So they sold it to you right here. And then once the price come up here and you want to sell it yourself, now you are at the ask price. But if you want to sell it, you're going to give it to somebody at that bid price, okay? Because what you want to do is you want to get out of this position. You want to get out of this position. So now whatever that bid price is, that blue number, that's what you can get because that's what somebody is willing to buy it at. You already own it. You already own it at this point. So now you have to figure out how much is somebody willing to buy it at. Okay. So that's the bid price. That's what somebody is bidding right now. Someone is bidding. If you own it, you want to be looking at the bid price. If you don't own it, you want to be looking at the ask price. All right, write that in your notes. If you own it, you want to know what are people bidding right now and if that's a good price, right? If it's above what you paid, shoot, give it to them. That's great. All right. For the ask price, if you don't own it, you want to know what is the current selling price? What is somebody willing to let this go for right now? And if that price is good compared to where you think the price is going to go to, then that's a trading opportunity. That's all we're doing here, okay? The bid and the ask price, back and forth, back and forth. You're either bidding or you asking, bidding or you asking. You buying low, selling high, or you selling, you buying up here, predicting that it's going to go down here and you'll make money if it goes down here. Okay. The good thing is, as long as you're trading during the right time of the days, and we'll talk about that in the next lesson, as long as you're trading during the right time of the days, the difference between these won't be very significant. So if you look right now, the ask price is 1.2244. That means you need 1.22 US dollars. That's like $1.22, for example. Okay. You need $1.22 to get 1 British pound. And then if you want to sell it, it's going to be 1.2243. So there's a difference of just 1 point, which we call 1 pip. 1 pip difference. And we'll talk about that next lesson. That's still part of this grade 1, but we talk about that in the next lesson. okay? It's a difference of 1 pip. So it's not that big of a difference. It's not that big of a difference. So you don't have to get too caught up in the ask and bid price because usually they're really close. Now, if you're trying to trade around the time the market just opened, it's going to be a difference. You're going to see that they're different by maybe like 11 pips or 12 pips or 13 pips. It's going to be a more significant gap in between the ask and the bid price. So now you got to be careful. You got to really be like, wait, do I want to pay that price? Because I'm going to be in the hole immediately. Not just, you usually start off negative as soon as you open up a trade, but you're going to be deep in the hole, and it makes it harder for you to get out that hole and make a profit. So you don't want to be trading around the time of market open and market close. And once again, we'll talk about that. That's going to be great too when we start talking about time frames. Oh yeah, cool. Good check. Good to see. All right. Sabrina says, say that again. I forgot which part you want me to say again. I'm sorry. But yeah, I think you're talking about the ask and the bid price. The ask price is when you already, when you don't own the instrument, when you don't own it and you want to get in, you have to figure out what are people asking. And the bid price is when you already own it and you want to let it go. Okay. The bid price, you already own it and you want to let it go. So you need to know, what is somebody else willing to pay for it? Okay. So if you own it, that's the bid. You want to look and see what people are bidding on it, and do you want to let it go? Now, this is the thing too. You may already own it. You may already own it at this point, but you think it's going to go up further. So guess what? You still looking at the ask price. You could have bought here and you could buy again here. Because remember, you can double up on your position. You can triple up on your position. You can keep on buying more and more and more. Okay. And if you just keep on buying more and more and more, it's fine. You could buy here. You could buy here. You just keep looking at the ask price. So you'll ask yourself, what is the ask price here? All right, that's what you'll pay right here. The market goes up again, pulls back, and you can say, okay, what's the ask price again right here? I want to get in again. So you can just keep on paying the ask price because it's going to move up. You see it's red right here. It's going to go up higher and higher with you. Okay. And you can just keep on paying that if you think it's going to keep going up. But eventually, it's going to come down. So you want to start looking at what is the bid price. If it starts coming down here and now it's going into your profits right here, now you want to start saying, okay, what is this bid price? I want to sell it at that bid price. So right here, you would sell at that bid price. Somebody's willing to give you some money for it. You take it, you get out the market. You still won because remember, you bought here and you rode it all the way up. And then you finally got out around here somewhere. Okay. So you can keep buying as the market is going up. Like, oh, I think it's going to keep going. So now you're doubling up on your position, tripling up, quadrupling up. You can keep on just keep getting it if you think this is at a really good price. So that's pretty cool, right? All right, that's making sense. Making sense? Any questions? If it makes sense, type unlock. If you're confused, just type a question mark. Ask price is what somebody is selling it at. The bid price is what somebody is willing to pay, what they're willing to buy it at. Okay. Cool. All right. So I'm gonna clear this off a little bit. Is it cool for me to clear this? Is that all right? Anybody still taking notes? So up here you see, this is our ask price and our bid price here. You can also get them over here and over here. Okay. So it's two different places where you can see the ask and the bid price. They're the same. This number right here in the middle, though, tells you what the spread currently is. The spread is 0.7. That means, let's see, 22.24, 22.49. It's not, it's like a fraction of a pip. That's what they're saying. It's like a fraction of a pip. That very, very last small number is like a percentage. So let's say I was saying like 99% of the time, you know, I wake up on time, 99%. Or I might say, to be more specific, 99.9% of the time I wake up on time, okay? So that extra 0.9 gets us closer to almost a full percent. But what's left, right, 99.9%, right? You know, that decimal is important because it lets us know, like, this is just a fraction. What's left after this? 0.1. You know, nothing big, just 0.1%. It's not even that important, right? It's not that important. If somebody says you're 99.9% pregnant, are you really going to be like, well, let me look at this 0.1%? You're not, right? If somebody says I'm 99.9% sure it's going to rain today, are you going to be like, I'm wearing shorts, I'm riding with my top off, or, you know what I mean, Jade, on that Lamborghini, you're going to take the top off with this 99% point? Any chance that it's going to rain? No, thank you. All right. I'm good. Exactly. So same thing with this price for the Forex. This last little number is not that significant. It's there for you, and it can help you if you're going to get very, very granular on your entry points, like super scalping mode. And we'll talk more about that later on. It's for specific strategies. It's not for all of us. So for the most part, I'm ignoring that last number. Okay. That last number we're ignoring. Okay. So far we covered that. X-axis is the time and date. The Y-axis is the price. The price consists of the ask price and the bid price. The ask price is what someone is currently willing to sell it at. The bid price is what somebody is currently willing to buy it at. If you subtract those two, you get the spread. That's the difference in between those two. And usually the mid price is right in the middle of those. And it just lets you know what the average is right now. So not that significant right now. But the ask price is what somebody is willing to sell it at. The bid price is what someone is willing to buy it at. Okay. With this Forex currency pairs, the 4 digits after the decimal point are significant if it's a 5-digit number. So that's what I want to get into next. I'm going to clear all of this, and I'm going to talk about let's call it 5-digit pairs versus 3-digit pairs. Okay. This is dealing with price still. We're still dealing with price. 5-digit pairs versus 3-digit pairs. Okay. So if I go, right now we're on a 5-digit pair, and let's just keep it simple. I'm gonna put this right here, and I'm gonna say the price of GBP, which is the British pound versus the US dollar, is 1.2251. We're not worried about the last digit. It's 5 digits, but that will, remember, the 5 digits is after the decimal point. Okay, so whatever is after the decimal point, we're not worried about the last one, which might have been a 9 or a 0 or something like that. We don't care about that last one. Okay. And then we have GBP, let's say JPY. So this is versus the US dollar. It's going to be 5 digits. Whereas with the GBP JPY, the price may be different. It may be something like 163.240. Okay. So look at the difference. It's not about this ahead of this. This doesn't really matter. It's after the decimal point that I want you to focus on. This does matter for sure, but I'm saying for what we're talking about right now. When we say a 3-digit pair versus a 5-digit pair, we're talking about how many digits are after the decimal point. That last digit does not matter. Same thing here. This is a 3-digit pair, but the last digit does not matter, so we can delete it. So really it becomes 4-digit pairs versus 2-digit pairs. Okay, that's the truth. This is what we look at most of the time. So the only pairs that have 2 digits though are the ones that end with JPY. That's an easy way to remember it. If it ends with JPY, then all of your signals that you get from T.bot and also your y-axis over here is only going to have 2 significant digits after the decimal point. Only the JPY pairs. All the rest of them are going to be 4-digit pairs. All right, 4 digits after the decimal point. You notice that? Good. Yep. So only the JPY has that. So that's significant because, you know, people get confused. They like, hey, this signal just came through. You're going to be in that point and you're going to say, but the signal, you know, it has this many numbers after the decimal point. Like, what do I put? What's significant? What's not? Even with the signals, you're going to notice we stripped off the last number. There's no number here, right? There's no number right here behind it. We got rid of it because it's only going to confuse you when you first start off. It's not that significant. Okay. So if you're confused, if you don't understand that part right there, that there's 2-digit versus 4-digit pairs, just type a question mark in the chat and I'll be sure to, you know, follow up with you to make sure that you get that clarity. But that's it right there. That's really the simple part of the price. Okay. And same thing here, 163.24. What this means is that you need 163 Japanese yen to make 1 British pound. GU, and sometimes that's how we call these, GU. So if you hear me say that slang, that's just shortening this pair. None of them match. None of them have the same one. So if I say GU, I'm only talking about the British pound versus the US dollar. Okay. GJ is the British pound versus Japanese yen. Okay. Cool, cool. No question marks. I mean, we're getting clarity. That's great. That's real great. Okay. So look at that though. It's funny because right now the British pound is looking like the strongest currency in the world. Just looking at it from a high level standpoint, because you need at least 1 and some change US dollars to get 1 British pound. So if you go to Britain right now, you go somewhere in the UK, right? You're going to end up losing money if you got American dollars. So if you take $100 over there to the UK, you're going to be down 22 cents per dollar. So 22 cents per dollar, you're probably going to be down like $22 maybe at the end of all of this. Okay. Okay. All right, cool. Make sure we covered it all. We talked about instruments. We talked about pips. Oh, I'm sorry. I'm on the wrong one. Line chart, X coordinate, Y coordinate. Cool. All right. And we even talked about instruments a little bit. We're going to talk more about that next session. We actually squeezed it in here, which is cool. But that's it. That's grade 1, 1.1. That's all I really wanted to cover. This line right here is just going up and down as the price changes. So the exchange rate for these foreign currency pairs changes daily, right? It's decentralized. It's predicted by how people feel about currency, okay? So if people think that the British pound is weak and they're taking their money out of it, then this chart is going to go down. If people feel like the British pound is looking strong, their economy is strong, or some good news came out, or based on where it's at on the chart, a pattern showed up, this line is going to go up. And we, are looking for buy opportunities. So we'll get into trading soon. Right now, we're just going over, before we can trade, we need to know, what are we trading? So instruments, we need to know about pips. We need to know, how do we know when to trade? So we need to know, where's the line graph at, okay? But that's it, all right? So that's day one, that's grade one, trade, grade 1.1, okay? And I hope that was very simple for you. Hope that made sense. I hope you got a little bit more clarity on just how to read this chart. Just looking along the bottom. So when I say, hey, go back to March 3rd, you'll know to look down here and just scroll back until you see March 3rd. And you'd be like, okay, here goes March 3rd right here. This is where I should be at. I'll go in that range. We also, one more thing I want to show you. I know we're going to get more into time soon, but you can also jump to a specific date as well. So we'll talk about that as well. But yeah, thank you, everybody. Appreciate you so much. Hope this was helpful. If this was helpful for you, for sure, do me a favor and type unlock in the chat. Sabrina got a question. She asks, how does the news come into play? Yeah, the news just, depending on how significant the news is, we'll talk about that later on, in high school, but the news is very significant sometimes. Right now, the news is heavy. It's very heavy. I don't like to trade the news. For the most part, I like to ignore the news because it's not always significant. But right now, there's a lot of economic news in the data. I mean, there's a lot of economic data in the news, excuse me, a lot of economic data in the news because we're on the brink of a recession. We're in a war right now. Nobody's talking about it anymore, but the Russian-Ukraine war is still happening. And that's a very significant war because it will affect oil prices. It could affect gold prices. It can affect partnerships between countries. So it's a very significant war. The recession is very significant. It's happening not only in America, but also in Canada and the UK and Europe as well. So usually news is about just without it being about, is there about to be a crash or not? Usually it's just about how healthy is the economy. And as long as it's in normal ranges, inflation is up 0.2% or 0.3% or 1%, that's fine. But when inflation is up 7% over the last year or 9% over the last year, we're making new highs oh, shoot, it's the highest it's been in 40, 50, 60 years. Now the economic data is significant. Now we got to pay attention to the news. Okay. So usually we won't, usually it's you pay attention to it. You want to be on point around market open, market close, or, something's about to come out at 8 o'clock. You want to see what's going on. You'll be able to see pretty quick what's happening. Right now, there's talks every day, every other hour about the economy. So it's significant right now, and we just got to be on point. Where will be a good place to look for that info? So every morning we go over this on a daily hypo session. We go to forexfactory.com and you'll see, check this out. Let me go to the right dates. This is March, April, May. You can go all the way back. It's so cool. And you can see, so this is the week that we're currently in. You can come here and they give you some folders to help you identify what's what. So red folders means high impact. News is expected. It's probably going to impact the market heavily. This is medium impact. This is low impact. Okay, so if I go up here to the top, today's Monday, June 27th, we got some orange folders, which means medium impact news is coming out. Tomorrow's Tuesday, we got a red folder coming out. So around 10 a.m. for the US dollar, you just want to be on point and know ooh, let me not be in any trades. Or if I am in some trades, if it starts to go against me really fast, that means the news is probably affecting my trade and I want to jump out as soon as possible. Now, if the news helps your trade, you want to stay in as long as possible. Okay, and we'll talk about that. We'll get to that point. But yeah, this is forexfactory.com. They have a calendar up here at the top. It's so helpful. It's always updated. As soon as news comes out, you can see what the actual data was. As you see, it says what the forecasted was compared to what the actual was. And if you click in it, it gives you a breakdown of what this news means and why it's significant to traders, why traders care. They even link off to some other articles. I like to read these as well, my downtime, to get more in-depth knowledge on the economy and why this news is important, okay? So I'm hoping that y'all beast out like that too, all right? I want y'all to be like beast. If I didn't mention this already, tribe, like my goal is always to help people become smarter than me, right? I hate being the smartest person in the room, okay? I just do. Now what it does for me though is it challenges me now to want to get better. Once somebody's smarter than me, now that challenges me to want to be better. So it's this never-ending cycle of being the smartest in the room, then being the not smartest person in the room, so I could feel the challenge to be the smartest person in the room again. To that way, then I can push other people to be smarter than me. And it's just this cycle. It's iron sharpen iron. That's how this should be. Okay. So the goal is to see y'all beast out, to see y'all share resources that I didn't know about, to talk about strategies that I didn't know about, to find setups that I didn't see, to mention news that I forgot to mention, things like that. Okay. So if you're down to be smarter than me, type unlock in the chat one more time, please. And I'm talking about chart smart. I ain't talking about, you probably already smarter than me in like health or riding mopeds or fixing cars or being a mom. You know, I'm not the smartest in everything for sure. I'm just talking about charts right now. Thank you. Yeah, for sure. Like that's really the goal. Like we all got to build each other up. So I think I talked enough for today. Hope you enjoyed this session of Day Trading School. We will be back with the next one real soon. See you in the next lesson. Peace. Unlock.